anywhere, it's been so long since I looked at one of my books, anywhere from 10 to 15 Japanese books. I'm the only one who has the source material. And all the other books out there use my book as a reference. I had to actually threaten a few of them to at least acknowledge that. They don't like to do that. But look at the back of their books, their information, and you won't see any Japanese books. I spent years and years of research uncovering what I call these secrets of the Orient. It took me about a year to, first of all, I found a translator, and I wrote a little article in Futures Magazine in the 1980s. And there was so much, a one-page article, I think, and there was so much interest in the candles at that point that I said I have to do more research. And the trade recommendations were working out so well. When I was doing the trade recommendations back in the 80s, when I was doing the initial research on the candlesticks, I didn't let the commodity brokers out there know that I was using candlesticks because I was still doing research. And the trades were working out so well, it really gave me the incentive to continue to pursue the information, and it was a lot of work. As I started to say, it took about a year to have somebody translate all the books, about 13 books, and then it took me about a year for me to translate his translations. The Japanese do everything by metaphors and analogy. So I had to learn about Japanese history, about Japanese military culture, like the samurai, and we'll be making a lot of references to samurai and military history today, and then about another year to write my book. So my great concern was when I was writing the book, I would go, and the book was done, I would go into the bookstore, and I would go to Barnes & Noble and be in a books for a buck bin, you know. So luckily, that has not been the case. So what we're going to do today is go over, as I mentioned before, some of my favorite candlestick and Western indicators. We'll talk a little bit about money management. That's not really the focus here. There's other avenues, educational resources, but we will definitely touch on money management because it's such a vital component. And one very important aspect, and the reason I'm so pleased to have you here, is I really want you to ask questions. The way you're going to get the most information out of this seminar, the way we're going to learn from each other, is ask questions. Okay, this is very interactive. The Japanese say questions are the wick in the candle of learning. We're also going to have hundreds of real-world examples. You have this handout. Okay. And we're going to go step by step. The Japanese proverb says, "The fool in a hurry drinks tea with chopsticks." Okay. We're going to go over this step by step. That's why you have this voluminous handout. Okay. And the way I like to visualize this actually is the information is going to come out like gushing from a fire hydrant. Okay, this is your bucket to catch the information. So let's look at what we're going to be doing today, an overview. First, we'll be going over the construction of the candlestick charts. I had asked you how many are new to candles. I guess the question is, how many use bar charts now? How many still use bar charts? Nobody. Okay, I'm not surprised. Every time I ask that, there are fewer and fewer people because people realize the information they get with a candlestick chart can't be received any other way. And for those new to candles, I want to make sure we all understand how to draw the basic candlestick line. So we'll be going over that during the session today. We're going to look at individual candlestick lines. You'll be amazed with how much information you get with one candlestick line. You're going to see how the candles relay the imbalance between the bulls and the bears. Then we're going to progress and look at candlestick patterns, and that is more than one candlestick line. Most of the candlestick signals are made by more than one candlestick line. We're going to look at the differences between Forex and non-Forex candle signals. I get many emails asking about my resources, my DVDs and so forth, and they ask, can they be used in the Forex market? And the answer is yes. The only thing that can't be used are gaps, okay, what the Japanese call windows. However, although all the patterns can be used in the Forex market, what we're going to do today is show you how those patterns are a little bit different because the Forex market is a 24-hour market. Blueprint for Forex trading success. And what we're going to do that in this, which will be later this afternoon, is kind of bring together how to use the candlestick signals so you can apply them in real-world trading strategies. So for example, we're going to show how to combine candlesticks with Western indicators. Now, I've talked about Western indicators before in my other seminars, but I'm going to be looking more today on what is important in the Forex market. For example, Fibonacci retracements. Very important in Forex. I don't talk about it when I do seminars for equities. So we'll look at East and West. Then we're going to be looking at intraday candles. Since so many of you are intraday traders, we're going to look at techniques that will help refine entry and exits on the intraday. Even for those who are not intraday traders, for swing traders, hold positions more than a day, I'm going to show you some really neat techniques for using intraday signals to get earlier buy or sell signals that you don't see on a daily chart. So for those who are intraday, certainly this is going to be important for you, but don't tune out if you're a swing trader. I'm going to show you some really neat things that you can apply to improve timing, entering and exiting the markets, things you may have never thought about before. Money management. Okay, this is one of the greatest misuses of candlesticks. People forget about risk-reward analysis, adapting to the market, looking at the candles in context. Again, we'll be going through all this during the seminar. Okay, trading psychology, we'll touch on this also. Okay, you can have all the tools, but if you don't have the right psychology, the tools are not going to do you any good. And that's a real challenge to many, many traders. And we're going to have what I call the candlestick screener. Okay, a lot of this stuff is brand new, including this. Okay, a very valuable way to increase the odds of a trade working if the market's at support or resistance. By the conclusion of the seminar, let me tell you what you're going to be able to accomplish. You're going to be able to spot market turns ahead of the competition. This is what the candlesticks shine at, giving us reversal signals in 1, 2, or 3 sessions. You're also going to be able to know when to act on a candlestick signal and when to ignore a candlestick signal. Not every candlestick signal should be traded. This is a major mistake many traders make. They get so excited that they recognize a candlestick signal, that they buy or sell it. That's the easiest and best way to get burnt with the candles. You're also going to know which trades to avoid. Candlesticks excel at helping us evaluate probabilities. So we're going to look at analyzing the candlestick line or signal if the market makes a new high and low and be able to say to ourselves, well, the market broke resistance, but based on this candlestick signal, I don't think the rally is going to continue.